us. For more insight on this week's market outlook, though, we are joined by Rebecca Walser, president of Walser Weath Management in Tampa, Florida. Rebecca, good to see you. So a lot of volatility in the markets last week, and maybe even some of the Dow movement today, showing that we could get some this week as well. What do you expect, and kind of what are some data points that you're watching?
Yeah, I think investors are just digesting the craziness, right? It's been kind of a crazy ride this year. So President Trump talking on Friday that there could be a break, obviously, in the trade negotiations. And it's really looking like the Chinese want to wait out this president's administration, see if he actually gets reelected or not. And so that's going to give us no stability on that front. And I think the market is pricing that in now. And that's what we're seeing here is the market's pricing in, okay, this is not going to get resolved anytime soon, if at all.
Hey, Rebecca, it's Heidi here. So we're hearing a lot of market strategists kind of recommend investors to go defensive here and rotate away from the growth stocks that we're seeing. Do you recommend this play for investors as well? Is this a way to hedge the potential no deal with the trade war?
Well, I do think long term, if you look at the global economy, where are people going to go? So long term, our U.S. economy from a perspective looks better than anything else. China's got obviously its issues. Europe is a problem. They don't seem to be able to get out of into a growth phase and get past their own regulational issues, plus Brexit coming up. So we still believe that the United States, from a global perspective, is the place to be. That being said, we've had a 10-year run, plus 10. And everything is cyclical, including this economy, even though President Trump doesn't want it to be the case. And so we do expect the inverted yield curve alone is been a very good barometer for almost 50 years of a coming recession. And, if you look at economic cycles, we're really overdue.
Rebecca, Dan here. Let me also ask you, if we just take a look at market kind of sentiment overall, what's funny to me is it's already been, over a year that we've had the trade uncertainty, or if you want to call it a trade war, fine. And for the most part, investors kind of shrugged it off and weren't concerned. I mean, we watched markets, and especially the S&P, go much higher, even amidst all of the trade war talk. And then only now, in the last couple of weeks, it has kind of intensified. Now, people can kind of point fingers at the Fed. But what do you make of that sort of the sentiment has clearly darkened and turned more pessimistic now?
Yeah, I think it really started May 10th, Dan, when we heard that shot across the bow that, hey, this is not, Chinese aren't going to sign the deal that they've already negotiated. And then since then, we really started to realize this might not get done. And obviously then the escalation and then the break, the 90-day truce. And now we're back at the table and we're still just not able to get it pen to paper. And so that's what investors are finally starting to realize. It has been a year. We don't have that much more sort of patience in the tank, maybe, especially because now we're starting to see that China strategically maybe is just trying to outlive Trump. They think they'll outlive him. And, if he doesn't get reelected, they'll succeed. So it seems to be their strategy right now. President Trump, though, has a lot of things up his sleeve. I wouldn't count him out. He is an immaculate chess player. So I am not one to, be surprised anymore by something that comes along and makes the Chinese have to shift again. So now we're seeing them shift with the new escalation of potentially the final amount that hasn't been tariffed yet with their devaluation and now being labeled a currency manipulator. So we've got a chess game going on here. It's very strategic. It's the most world stage we've ever seen between two of the world's superpowers. And it's going to take time. But investors are getting impatient. We're starting to realize this is probably not going to happen anytime soon, certainly not before the election, maybe next year, unless Trump has some kind of move we haven't seen yet, checkmate. And that's what the investors are reacting to. But still, I urge caution, even though I do think recession is potentially possible. The United States is still the best place to be in this global world.
All right. Well, we'll see what next chess move President Trump makes. Rebecca Walser of Walser Weath Management, thank you so much for joining us this morning.
Thank you.